Well, congratulations, America. I think we have officially done it. We have broken the stock market. Almost every day this week saw greater than 5% swings on the S&P 500. The volatility index, it's been pinned above 45, making it more volatile than Bitcoin. The news, they're driving markets more than fundamentals. And guess what? Insider trading is now for everyone. This is why we can't have nice things. I mean, case in point, Fartcoin was the best performing asset again this week, but that's a different story. To paint a little picture of the backdrop, the 10-year yield is moving in concert with the S&P 500. They're normally inversely correlated. We saw the most bullish inflation numbers for CPI and PPI, and the needle did not move one bit. And one bright spot in the background is that Bitcoin is potentially decoupling. It's all about tariffs right now, and the markets want two things. They want clarity from the White House, and they want easing from the Fed. The latter, I think, might actually come sooner than expected. So join me for another wild weekly wrap up as we look at the macro and key charts for swing trading stocks, commodities, and crypto. I'm exhausted. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome to the Trading Apologist. My name is Tom. I hope you guys aren't too worse for the wear after another roller coaster of a week. The good news is there are some bright spots in the market that we're going to highlight today. Before we jump into it, if you do find value in this content, if you could hit the like and subscribe button, that would really mean a lot to me. I'm on week 2 of this journey, and it's not really getting into front of too many eyeballs yet. But if you like, subscribe, comment, all of that helps me get it out there. I'm really just doing this for fun and to inform retail investors. So thank you for the support. Now we're going to look at fewer charts today just because the market is really driven by two things. It's driven by the news coming out of the White House and the 10-year Treasury yield. If you're not familiar with how Treasury yields impact the market, there are a couple things that can happen. So selling of Treasuries like China was doing this week with all the tariff saber rattling, that increases supply. So the rate for Treasuries needs to go up to attract buyers. That increased rate then can trickle down to things like mortgages, car loans, business loans, making the cost of borrowing capital more expensive for average Americans. Also, as countries are buying these treasuries, those foreign countries receive dollars, and then they convert those dollars into their own currency. And large conversions can weaken the US dollar due to increased supply. So we saw this dollar dropping this week. And thankfully, there was a successful 10-year treasury auction this week. There was some concern around that, but it ended up being a non-event. Now, normally markets go down as the 10-year yield rises, but since the start of tariffs, the markets have really been moving in concert with Treasury rates because they like the pressure it's putting on the administration in regards to tariffs. So all that aside, ultra bullish CPI and PPI numbers, I mean the best numbers we've seen in months, if not years, did not move the needle one bit. And normally futures would have soared on both those releases. If we look just really quickly at Forex Factory, we'll go to... See, core CPI was at 0.1 instead of the forecast 0.3. The month-on-month was at negative 0.1 instead of 0.1. And the year-on-year was at 2.4 instead of 2.5. So really bullish reads. The cost of food was a little bit higher, driving this core number up a bit more than expected, but really nothing to worry about. And then on PPI today, core PPI at negative 0.1 instead of 0.3, month-on-month at negative 0.4 instead of 0.2. And then consumer sentiment wasn't too bad. However, with on-again, off-again tariffs and on-again, off-again recession calls, markets are hyper-focused on news. And we saw that impact on Monday with the largest intraday reversal in history. And that news-driven narrative was seen even more clearly on Wednesday with that enormous rally. And then we had unprecedented dark pool activity. In fact, the largest transaction ever recorded right into resistance at the close. But if we're looking at historical stats and we're looking at the falling input costs and incoming monetary easing, there are so many tailwinds right now that point to the potential return of bullish price action. Now, we still have a lot of work to do, don't get me wrong, and there is some key resistance overhead. So let's dive into the charts and see where we stand in markets so we can paint a picture and get an outlook for the week ahead. So diving right into the daily chart on the S&P, we have last Wednesday on tariff announcements, Thursday, Friday selling off, more of a sell-off Sunday night into the open on Monday. And then as news came out of that potential 90-day pause on Monday, markets shot up. But as the White House said that those news were not true, we dropped right back down. Bit of an indecision day on Tuesday. And then Wednesday, as the announcement was made that we will actually pause for 90 days, you saw that huge candle upward. And the interesting thing on this candle, if we just take our fib retracement tool, that was exactly into the 50% level. And this is where we saw those huge dark pool transactions. So people were clearly selling off into this level. And actually, I sold off a little bit on some of my positions in Tesla and a few other names. I took about 30% off the top because rallies like this and the indecision we're seeing in markets will probably see more downside. And we saw that on Thursday and Friday as we got another opportunity to buy back in. Now, you might be wondering why I took 30% off right there. And you can see this was our first gap fill at 53.94. And I started selling a little bit there. And then I had this 50% level already marked. And as I saw, we were hitting not only that 50% level, but the previous lows here. You can just tell that's going to be a point of resistance. And in markets like this, with all the uncertainty and things being driven to and fro by news, it was almost certain that we would get a pullback. And we got more than a 50% pullback the next day, and it gave me a chance to get back in. So with big sell-offs like this, counting this as number 5, 4 of the last 5 sell-offs, after we had the most extreme move, we still made a lower low. Extreme move, lower low. Extreme move, lower low. The only anomaly right here was COVID, where things bounced right back up. So the probabilities are stacked against us a bit that we might still see a lower low. And if that happens, I really wouldn't want to see anything below this 4,600 level. Anything beyond that would be a cause for concern, and really breaking our previous low of 4,800, as I mentioned in last week's video, is already pointing to future potential weakness. Because if we go all the way back to the bottom of the 2022 bear, that is exactly our 50% level. And markets in the top half are generally stronger, markets in the bottom half are weaker. So just wanted to recap that. If we do zoom in back to just the weekly time frame, that is not a bad looking candle, but again, we're below this 50%, so that's the work we have to do. If we go back to the daily, the other key gap fill, which I have marked on the chart right here, is just below 5,600. That 56 into 5,700, that is going to be major resistance for us. And if we bounce back up into that next week, I would anticipate more selling to come in there. If we can get back above that and above the 200 MA, this yellow line, that will be our first sign of real strength. But what I would anticipate is if we see a move into that, we'll have a retrace and then hopefully set a higher low. I suppose what I'm saying is do not expect an end to volatility anytime soon. Even though we have this 3-month pause, tariffs are still in effect, and there is going to be more saber rattling with China and things that will no doubt keep this market interesting with a lot of opportunities. Okay, moving on to the HSI. We discussed this on Monday as having this huge pullback, and we've seen a fairly strong bounce towards the end of the week on the HSI. But now there's also uncertainty because of the White House saying that they would potentially delist Chinese stocks in the US. And that would put a lot of selling pressure by hedge funds and other big institutional players. So one position I got into this week was BABA, and I actually exited that on Friday just because of the uncertainty. So looking at a clean chart here on BABA, the HSI actually bounced back a bit more than BABA did. I got in around $96 to $98 down here, and I only held it through Friday, and then I decided to sell going into the weekend because the White House was saying that they are considering delisting Chinese stocks, which would put that huge sell pressure on this market. And even though this feels like an easy 30% gain to this gap fill at 125, this is lagging the rebound on the US market. It just feels too risky moving into the weekend as tensions continue to escalate between the US and China. Even though this has great potential upside, you don't want to be in a trade where you're beholden to a news announcement. You want to be stacking the odds in your favor, and that's something that, even though the chart looks good, it has a potential island reversal, you just can't control that. Looking to the DXY, you can see the DXY after this multi-year consolidation this week absolutely fell out of bed and broke all our previous lows. Now it bounced back into this range right here, but we're still under parity. We're just under a dollar here for the DXY. So this is positive for risk assets. This is positive for crypto. It's also in line with Trump 1.0 and what the administration wants to do. They want to devalue the dollar because it encourages trade. It makes US goods cheaper to ship overseas. All right, moving on to oil, you can see we broke back as well below all these supports and then bounced back up and ended actually fairly strong above $60. So we're back in line with these previous supports and kind of in this range right here. So oil is another one to watch. This one is definitely good for inflation numbers and input costs, but let's get into the more interesting charts, shall we? All right, gold on an absolute tear, shooting up to 32.36 this week. And if I go on the weekly chart, you can see our target that we've had here at $3,600. We broke through that first target of 3,000. This candle right here on the weekly is bigger than anything we've seen in this run up. And you can see that change in character and trend, how we're just going parabolic now. So in the next 2 weeks, if we hit 3,600 or thereabouts, again, remember targets are not a round number, they are a range. That to me would signal a definite time to get out if you are still in this trade, because that would be indicative of a blow off top and the kind of move that cannot be sustained. Remember, once something has been moving for a couple of years, we talked about how retail is all over this trade now. That means 2/3 of the move is normally behind us. And as more and more retail piles in, they get excited about these moves and they start buying in here. That's exactly when the smart money starts selling into resistance and you end up becoming the exit liquidity. So as much as possible, we want to avoid that for you guys. You know, if we take a dip back down to 3,000 and you want to try to play the swing, that's fine. Have fun with it, but be careful. So I wasn't going to touch on Tesla this week, but since I did trade it a bit, I figured I would just mention what I'm watching here. So as we got back down to below 320 here, I loaded up just a little bit more as we were getting into this support. And this was this big candle that we had on Wednesday where the S&P 500 was into key resistance. And we also passed that 150 key level on Tesla. So at 150, I unloaded a couple hundred shares. And then as we got to 162 and then 172 up here, I offloaded more. And then I started buying back a little bit just below the 150 mark as we pulled back into Thursday. And that was pretty clear and replicable. This was the second largest daily move we've ever had in the history of Tesla. So remember, the market doesn't like abnormal moves, but we came back down into support. Good buying opportunity. You know, if we happen to dip back down here, I'll reload even more. But the thing I'm watching on Tesla right now is just this resistance. The pair trade I've been doing with MicroStrategy, moving MicroStrategy into Tesla. I should have actually shifted some of that back here because MicroStrategy has been outperforming into the end of the week, but those are hard things to nail and you're not going to get all of them. A lot of great announcements coming out right now. Herbert Ong has a channel called Cyber Bulls where they had a great Tesla video that came out, I think on Thursday. All the latest announcements. So if you're into building positions on Tesla, you believe in it long term, that might be a fun one to check out. I will put the link down below. Okay, moving on to the exciting things of Bitcoin and crypto. And as you can see here at the beginning of the week, we had this little double bottom. If we go into the 4-hour time frame, you can see that double bottom a little bit more clearly. And if you measure that target from the neckline, it actually takes you up right here to the 200 MA, which is right where I have this alert set at just over 87K. Now we do have this diagonal downtrending resistance that has been pestering us for the last 10 weeks. I mean, look at that. Since the all-time high on January 20th, we have just not been able to break past that. So we tested it again today. If we can get through this over the weekend, I suspect we would hit that target. But there are also some things pointing to potential continued chop in here until we get to this apex point. So let's really watch that line of resistance carefully, because I think that will tell us if we're going to see a faster recovery or if we're going to chop around a little bit more before potentially moving upwards later. If we go over to the weekly, now we were talking about this key weekly RSI support level at just over 44 that has been support and resistance between the bear and the bull market for years. And we just retested that for potentially a little double bottom. We're bouncing away from that now, but this is really important to watch moving into Sunday night. If we all of a sudden dump and this breaks down, that's going to tell us something very different than if we hold up from this and potentially start bouncing away. So I would be a fan of breaking above this line, going to the 200 MA and closing strong, but really a close to the weekly, anywhere in this range, I would be happy about. Now I'm just going to bring up one other line. I'm going to turn off the 200 MA. I have another indicator here with the 200 MA, and this one I set to 365 days. And if we zoom out, let's just go on the daily again. All right, so this blue one is the 365-day support band. And if we zoom out for the entirety of the bull market, you can see how that 365-day moving average has provided clean support. And we bounced off that again this week, a little wick below, okay, let's be honest. But it did seem to provide support. Also, this diagonal line from these support points in September and August of last year on those lows held. So those are some encouraging signs right there on the daily. I'm just going to turn on one more bullish thing, and that's our global M2. And this green line, just to recap, if you didn't catch previous videos, this is offset by 108 days. So this is actually our current M2 rate right here, which since the start of the year has risen 9.1% globally. And you can see how that global liquidity really traces well with the price of Bitcoin. And, you know, I was hoping we would maybe break this and bounce sooner, but it really feels like we're tracking this so closely. So that's where this yellow line comes in. That's around the start of May. Right now I have that set at May 4th. This isn't an exact science. You can see here sometimes Bitcoin moves up a little bit ahead of time, but it also lines up with the apex of this resistance line and this support line we've had. So watch this area right here. Watch this downtrending resistance, this underside support, and I'll be scouting for a breakout around this time to see if we continue to track with global liquidity. But that's your big hopium shot for the day. And the fact that since tariffs started, this shot up this much, that is a very bullish sign for money flowing into the system. Okay, just looking at Solana really quickly, there isn't too much to update or say from our last video, but we do have this downtrending resistance just like on Bitcoin, and we're into it right now. We did break down earlier in the week from that key $112 support, and we broke the $100 psychological support. I was glad to see us bounce here and get back in that range. And now we're a little bit in safer territory again. Who knows? I mean, maybe we see a little pullback off resistance here and we end up forming an inverse head and shoulders that would help propel us through. But aside from the chart looking super crappy on its own, the fundamentals behind Solana really have me thinking it's worth accumulating right now. Now, we discussed on Monday that Wintermute is done with their selling. So right around the highs here, Wintermute got a ton of Solana from the FTX bankruptcy that they were liquidating. And that caused a lot of this cascade. And then we had more negative market momentum that kept pushing things down. But we have ETFs coming sooner than later. And Janover this week just adopted a Solana reserve strategy, kind of mirroring the playbook of MicroStrategy. And if you look at other companies that have done this, like Metaplanet or Sol Strategies up in Canada, their stocks have shot up like 3,600% in the last year. And Janover just this week alone was up 1,400%. So if I pull up Janover here, you can see this huge shoot up. There was a ton of volatility you could play, but this was when they announced their Solana strategy. Then we had a pullback, and then they actually deployed around $5 million for their first Solana purchase. But if we look at Metaplanet, which is a company based in Japan, and if we go out to the weekly, it's retraced severely. But since they implemented their Solana strategy, who wants to guess how high that went? That went up or 4,800%, just ridiculous returns. And if we look at Sol Strategies, CYFRF, again, this is the Canadian firm, and we measure that, almost 6,200%. Okay, I misspoke when I said 3,400. Geez, these things really fly. But you can also see how violently that's retraced as well. So this could definitely be one to watch. We had this huge gap up. I set a limit order, which I thought would not fill down here at the bottom of the gap, and then another one here at around $12. Unfortunately, none of those got hit for me this week. I'm going to keep an eye on it. But imagine how big this move would have been if we would have been in a risk-on environment. That said, there's so much risk in chasing, especially with the uncertainty in markets right now. I mean, if you buy up here at 62 and next week it pulls back to 27, no one wants to see that near 50% loss in their portfolio. So just be careful with these. There can be a lot of upside, but be very strategic with your entries. I mean, the first place I would start looking at it is maybe around that $32 mark where this volume cluster starts. And I still wouldn't feel great about that entry. But who knows? I could be wrong and this is up, 4,000% next week. Speaking of degenerate gambling, I just have to pull up the Fartcoin chart because this is remarkable. So talking about relative strength in these uncertain markets, it's important to identify stocks like we talked about Amazon being a little stronger than the rest of tech. This was stronger than the rest of crypto. So here we had our Liberation Day sell-off. Over the weekend, it bounced back up. And then on Monday, when everything else was making a lower low, this was one of the only cryptos that was making a higher low. So that was my signal that money was flowing into this. And around 46 to 48 cents, I got into it. And I last night exited half my position at 88. So almost 100% gain. And I left a little runner, which is still active right now. Actually, I think I moved my stop loss right here. So I might have gotten stopped out of this pullback. But the next target would be $1.13. And the thing I love about this is just how cleanly it's been playing off all these levels. I know it's a meme coin. I don't marry it. But if you can get in for a couple of days and see almost 100% returns, to me, that's worth a play. Again, altcoins, especially meme coins, don't do more than 1 to 3% of your portfolio. I just did a $10,000 position in this. But again, that's not a bad return for a couple days and an easy trade. Okay, just quickly before we wrap up, MicroStrategy, we're still working our way up to this resistance line. It's a little weaker than Bitcoin because Bitcoin is already at its downtrending resistance, but this was much stronger than other stocks today. It closed into the high of the day at almost $300. So I'm still keeping my eye on MicroStrategy. We know where that key breakout point is should we see that happen next week. Okay, so those are the main charts right now that I'm looking at. For me, it's really the SPX and Bitcoin as the sector leaders for stocks and for crypto. Now, don't be surprised if we see volatility over the weekend into that Sunday night open for stocks. We could see another 4 to 5% swing depending on what happens between now and then. We're not out of the woods. Yes, all of this could have just been 8D chess that Trump was playing to get China to the negotiating table, or we could be right back into it in 3 months' time or potentially sooner. So make sure you have a clear trading plan. You're managing risk appropriately. You set tight stop losses. If this is feeling like too much emotionally and we have another rally up, that would be a great time to sell. If on Wednesday we're thinking, it's all over, we're going back to the moon, when you're feeling that, that might be a good time to get out or at least take a little bit off the top. So if you have any topics you want me to cover on Monday, any charts you want me to go over, leave those in a comment down below. And until then, I hope you guys have a great weekend. Get away from the charts a little bit, do something for yourself, rest, relax. Personally, I'm going trail running and it's the last weekend that the ski hill's open. So my wife and I are going to get a few laps in. Definitely do that when times are stressful. Getting those happy hormones, getting some exercise will do wonders for you and it'll help you come back with more clarity. Anyway, I'll see you guys later. Bye for now.